Hey guys, this is Victor with Delerme CPA. It's great to see you again.
Oh, hi.
In today's video, guys, we're gonna be talking about, we all know that for the last 2 years or so, the stock market has been going up, right? And the reason for that is because, as we said in prior episodes, in prior videos, due to COVID, March, April of last year, actually, not last year, but 2020. It's crazy, right? It's been 2 years already. Anyways, so we all know that March, April of 2020, the stock market actually took a dive due to COVID, right? And well, a lot of investors actually took advantage of buying opportunities at the bottom of the market. And then as smart people, as smart investors, they have been able to ride the growth of the stock market. We all know that, some of the reasons for the stock market keep going up is because the Fed actually printed more money and the interest rates got lowered. And when this happens, actually the values of assets go up, right? There we have the stock market, real estate, amongst other assets, right? So a lot of investors actually have been making good money, a lot of money. And, they were smart. They've been able to either retire, accumulate passive income. They have been able to help family, help charitable organizations, and just have different options, right? So in today's episode, we're going to be talking about actually what would you do or what can you do if actually you lose money instead of making money. The purpose of this channel, guys, is actually to share with you my experience as a CPA, working with professional investors, business owners, and so we've been able to help our clients for the last 10 plus years, right? In a very successful way. And I just want to share with you my experience, my information, my knowledge, and hopefully you can use this information to make an educated decision. So let me tell you a couple stories. A client of mine, a dear friend of mine, back in 2008, who lost money in the stock market. And he lost close to $1 million in the stock market. And so he actually was not happy. He was depressed. He was not in a good position, right? But, he flipped it and he said, okay, so we had a conversation and we were like, okay, so you lost the money. We understand that. What can you do about it? And so what he did was he took advantage of the carryover capital loss rule, which allows you to basically offset any future gains in the stock market against the losses that you had in the past. And you can do this pretty much indefinitely. And that's what he did. So for the last, many years, he was able to actually offset the capital losses that he sustained in 2008 against the gains actually that he was making in the future. So he lost the money, but then he started making money, right? Year over year. He learned the lessons, studied the market, understood what his edge is, right? Basically what he's very good at. And then for tax purposes, he was able to offset the gains with the losses. So that was actually very smart. Now let me tell you a story of another client who lost money last year in 2021. And this client lost roughly about $500,000 in a single month. And this client actually was making money as a swing trader. Swing trader pretty much, times the market, understands when to buy it, and then waits for a few points for the stock to go back up and sell, right? So this person is not buying and selling. Actually, it's just buying and waiting for the right moment to exit the position. That's actually swing trading, right? So this person was swing trader for about a couple of years and was successfully making money. What happens was that the investor in this case changed the strategy from a swing trader to a day trader and lost a lot of money, about $500,000 in a single month. And that's very painful, right? No one wants to lose money. No one wants to lose $500,000 in a single month. So the investor actually bought back the position. So lost money and bought back the position within 30 days. So in 1 month, lost money in that stock and bought it back. And unfortunately, the client didn't know that it would qualify for the wash sale rule. The wash sale rule, basically, this allows you to take the loss for tax purposes if you sold the stock in 1 month and in the same month, basically 30 days, you bought back the stock, right? To take advantage of the upswing. So the IRS does not allow you to actually lose money in that position and then buy it back within 30 days. So the client in this case is not able to take the carryover loss rule to the future because the loss qualify as a disallowed loss. And the client and I had a conversation about it, a few days ago. And, we had a conversation about it and the client understood and learned the lesson, okay? So now the client's gonna go back to not to day trade as a strategy, but actually as a swing trade. She told me, well, Victor, I understand that. I think I'm a better long-term, not a long-term, but actually a swing trader. Hold the position and wait for it to go up and then exit the position and hopefully make money, than buying and selling during, as a day trader. So understand here what happened, guys. The other investor understood the rule and took advantage of the carry-up rule and offset, the gains in the future against prior losses. The other client here did not know that was under the umbrella of the wash sale rule, and basically is not able to offset $500,000 of losses going forward. So basically here, guys, you want to learn what kind of trader you are. Are you a swing trader? Are you a long-term investor? Are you buying and holding? Or are you a day trader, right? And then you have to understand what the rules are around taxes, right? You know that the maximum loss that you can take as a capital loss for tax purposes is only $3,000 per year. The remainder, you have to carry it over indefinitely, pretty much, right? As we see, guys, you pretty much have the option to utilize stock trading and stock investments for you to grow your wealth, right? You can retire, you can have passive income, you can buy more assets, you can help charity, you can help family. You can do many different things if you master investments in the stock market. Closing, guys, these are my 3 points. If you invest in the stock market in long term, as a long-term investor, basically more than a year, you understand that your capital gain tax rate is gonna be lower than ordinary. So we have spoken about that before, okay? So if you hold it for more than a year, you have a better tax rate. Number 2, if you have capital losses in 1 year, remember that you can offset future capital gains in the future. And number 3, you want to watch the wash sale rule, right? You want to make sure that you are not under that umbrella. So if you buy and sell a position within 30 days, right, and you lost money, you want to make sure that you wait more than 30 days in order for you to buy it back and take the loss for tax purposes. As always, guys, investments requires a lot of study, a lot of research, and you also want to talk to a professional about it. So you can utilize this information, talk to a professional, do your research, and then make a decision if you want to move forward on your investments. And as always, guys, thank you so much for watching these videos, liking and subscribing, and we'll see you next time.